In the first half of 2025, a quiet but decisive shift takes place in the global economy. As supply chains realign under new US tariffs and the world recalibrates its dependence on Asia, Africa emerges as a primary destination for global capital. Construction contracts, investment pledges, and cross-border deals accelerate at an unprecedented scale, with China alone committing $30.5 billion in new projects, a five-fold increase over last year. This is not a cyclical upswing. It's a structural turning point. And to understand why Africa is suddenly central to the world's economic future, we need to examine the fundamentals and the forces reshaping global trade itself. Welcome to Spotlight in Africa, where we provide the clarity, data, and intelligence investors need to understand Africa's evolving markets. For decades, Africa's economic narrative was dominated by structural constraints: limited industrialization, fragmented markets, and a persistent infrastructure deficit. This mismatch was always stark. Africa holds 30% of global critical mineral reserves, 60% of the world's solar potential, and 60% of uncultivated arable land, yet contributes less than 2% of global manufacturing, less than 2% of global data center capacity, and only a modest share of processed exports. The continent's demographic strengths, youthfulness, rapid urbanization, expanding labor force, were well known but poorly monetized. And so, Africa remained a supplier at the bottom of the value chain. That status quo held until a confluence of global disruptions forced a reassessment. The pivot began as global trade polarization intensified. Three forces collided. First, reindustrialization in the West. US and EU policies emphasized supply chain security over cost efficiency. Second, China's strategic recalibration. Beijing, facing headwinds in other regions, doubled down on Africa, now deploying capital at a pace not seen in a decade. Third, the launch of African Continental Free Trade Area. With full implementation expected by 2035, the African Continental Free Trade Area will form the largest single market in the world, $3.4 trillion strong. For investors, AfCFTA is not just a trade agreement. It is the framework that turns 54 fragmented markets into a unified economic bloc. This was the signal global capital had been waiting for. With macro alignment in place, 6 sectors began attracting outsized investment. Agriculture. Africa holds the majority of the world's remaining arable land and is positioned to shape global food security. Critical minerals. Sub-Saharan Africa could secure 10% plus of global revenue from the trillion-dollar minerals market. Data infrastructure. Region-wide mobile data usage is projected to quadruple by 2030, driving a wave of data center construction. Renewable energy. The electricity demand will double by 2040, pushing investment into solar, wind, geothermal, and regional grids. Hydrocarbons. Despite energy transition trends, oil and gas remain central to fiscal stability and export earnings for multiple African economies. Manufacturing. Companies seeking diversified, cost-effective production hubs view Africa as the next major global manufacturing zone. Taken together, these sectors represent Africa's highest value growth frontier in decades. Investors today are responding to 3 structural advantages Africa now presents. Demographics. A labor market that will account for 1/3 of global workforce growth over the next 2 decades. Demand. Rising urban incomes and expanding consumer markets driving sustained internal demand. Digital connectivity. Rapid adoption of mobile money, fintech, and digital services enabling scalable market access. This combination, resources, labor, and technology, creates a rare multi-sector investment opportunity. Africa has become a strategic arena. The US, EU, China, India, and Gulf states are pursuing deeper economic partnerships, each seeking influence over energy security, critical mineral supply chains, manufacturing diversification, market access to 1.4 billion consumers. For the first time in a generation, Africa is a price setter, not just a price taker, in global negotiations. Today, Africa stands at its strongest macroeconomic position in modern history. Record levels of investor interest, stronger trade architecture under AfCFTA, massive capital inflows across priority sectors, an increasingly strategic role in global industrial and energy transitions. Investors are not betting on potential anymore. They're allocating based on structural change. Yet the path forward is not guaranteed. Three constraints continue to shape investment risk: a $108 billion annual infrastructure financing gap, high sovereign debt burdens in several markets, fragmented, inconsistent regulatory environments. Addressing these will determine Africa's ability to shift from resource extraction to value-added production. The opportunity is clear. Execution is the differentiator. If Africa aligns capital with capacity, improving logistics, governance, and energy reliability, the continent can rise as a competitive, high-value hub integrated into global supply chains. A future where Africa exports not just minerals, but batteries and EV components, not just crops, but processed agricultural goods, not just raw talent, but globally scaled companies. With AfCFTA reducing trade friction and amplifying regional value chains, the next decade could redefine Africa's position in the world economy. Africa is not the next frontier. It is the next center of gravity in global business strategy.
For more intelligence on Africa's economy, finance, and capital markets, subscribe to our channel at Spotlight in Africa.